What's up, everybody? It is Monday, November 24th. This is Thanksgiving week. I'm not doing turkey this year. I'm sick of turkey, man. Got to do something else. All right, listen. So Friday, I said to you guys that it looks to me like the negative effect of the shutdown, the government shutdown, was abating. And I started to see that in an improvement in the leading fiscal flows. And I said the market was going to go up today. I said we'll continue this recovery if that's the case, and I think it is. I still want to see a few more days of data. Interestingly, we did not get the big monthly tariff drain last week, which I thought we'd see it on Thursday or Friday. That didn't happen. So we'll get it sometime this week. I don't think we got it today based on how the trading action was, very bullish. So maybe we'll get it tomorrow. But this improvement in the leading fiscal flows, if in fact that's happening, and so far it does look that way, but we just got really like 2 days worth of data. But if there is an improvement now and it makes sense, right? I mean, the government shut down, we had a big transfer to federal salaries at the end of last week. There was a big increase. Friday, there was another big increase of 5.1 billion. So these workers who had been furloughed because of the government shutdown, they're receiving their pay now. And federal salaries during the shutdown became a major source of fiscal drag. So that's being replenished. So we should see an improvement, a sustained improvement in the leading flows. But I don't think we're going to see any improvement or much of an improvement in net government transfers because we still have to deal with the tariffs. And that's also an open issue because the Supreme Court still has to rule on that. By the way, donkey face Howard Lutnick, he said today that the Supreme Court will rule that the tariffs are constitutional. So, and even if they don't, the White House is looking at other ways to keep maybe not the tariffs themselves, but other taxes and duties in place. So we got to see how that works. But right now, like I've been telling you guys, we're losing about 30 to 35 billion a month on these tariff drains. And that's what's causing net government transfers to, that's the water level in the swimming pool. That's what's going down. But I am encouraged by the fact that leading flows are picking up. And again, that makes sense because the government shutdown, just shut down some of those flows. Now they're coming back to normal. The other thing I want to talk about, I don't know if you guys saw this. You probably did. I don't know if I mentioned this last week in any of my videos. But this guy, Michael Burry, this is the Big Short guy, right? He's since the great financial crash back in 2008, this guy's been hanging around in articles about him. He makes comments. They're always covered. And I said a long time ago, and I've been saying that some people are more lucky than smart. And I would say that Michael Burry falls into that category. We find out last week or the week before, I forget, that he closed down his hedge fund and he said he was off to do bigger and better things. All right. Now, I'm pretty sure he closed down his hedge fund because I think he blew out. I think he lost most, if not all, of his money because the guy has basically been a short seller since 2008. All right, and I'm going to talk about that in a second. But the bigger and better thing that he went on to is he opened up a substack account, Substack. He posts up articles. Now, this guy, he's been an aggressive short seller of NVIDIA for as long as I can mention. I've spoken many times about my personal experience as a trader. Many, many years. I was a member of 4 different futures exchanges, a floor trader. I had a brokerage operation, which the brokerage operation made money. And my trading, because, and I've gone over this, it's a really weird, bizarre thing, but I could remember that most of the guys in those trading pits, nearly all of us, for some reason, we always wanted to go short. And I said, it's kind of comical, kind of funny. The only market where I didn't want to go short all the time was gold. And that was like in the late 80s and the early 90s when gold was basically flat to down, all right? Every rally, the dealers would crush it. The central banks would crush it. So, I never really made any money going short. I mean, there were times when I had big scores, big scores, all right? Like huge. And then I ended up pissing it all away over a period of time because I kept going short. You cannot go short a growth function. And I've tried to explain this many times. The stock market is a growth function. Look at any long-term chart of any index or average of the stock market anywhere, basically. And it just continues to rise. And that's because it reflects the growth in population, innovation, expansion in economies, the desire by people to do better one generation after another, increased earnings, like I said, innovation, technology, productivity. That is the nature of things. So, and I find that a lot of people are really fascinated with the short selling concept. And I also find that a lot of people are always waiting for the next crash to happen. And that's just like such a waste of energy. Yeah, you might hit something just like you might go to a casino in Vegas and play the slots and you're lucky and you hit the jackpot one day. But the odds are monumentally against you. That's the reason why they could build multi-billion-dollar hotels and casinos. It comes mainly from those slot machines. If you've ever walked into any of the Vegas casinos, you see that the gaming floor is enormous and it's mostly filled up with those slot machines where the house has a built-in advantage over the player. Now this guy, Michael Burry, he spent all of the last, 17 years after he made that score, and I'd say he was more lucky than smart, just like, the other guy who I've spoken about in the past was this guy, John Paulson, who basically went to Goldman Sachs and asked Goldman Sachs to create an instrument loaded with all the worst mortgage securities in it. And then Goldman Sachs went out and sold that, found a counterparty to the Paulson side of the trade. The counterparty was some, clueless German Landesbank, one of these local banks in some village in Germany that took the other side. Eventually, Goldman admitted to fraud on this deal. They got a slap on the wrist. Paulson made $1 billion or something like that. You haven't heard too much about this guy ever since then. Same thing with Dalio. Dalio with the nonstop, the debt doomsday freaking scenario that he keeps talking about because he does not understand, sovereign money. He doesn't understand that there is no debt, not in the classic way we think about it in private sector debt. It's just dollars outstanding that the United States has spent into existence since the very beginning of the Republic that people and central banks and other entities hold in the form of treasuries. But this guy, let me get back to this guy, Michael Burry. So he shuts down his hedge fund because he says, like, he said, and this is not me saying it. He said, I don't understand the markets anymore. Well, you don't understand it because you're shorting a growth function. And so he says, I'm going on to bigger and better things. So his bigger and better thing is to start a substack, something channel. All right. I just said it before. Now the thing went out of my head. Substack. He started a Substack account. And what do you think his first article was? NVIDIA, that it's going to crash. Like, give up already, man. Give up. I've said in the past that if the market was a person, its job would be to fool and mess up as many people as possible. And it would be very, very good at doing that. It has a way to infiltrate into people's emotions and trigger those emotions and cause those people to do things that are harmful to themselves. I think some of you, just based on some comments that I get here from time to time, you've been through that or you're going through that. I see the negativity. I see the cynicism. That comes from bad experience. That's where that comes from. That comes from feeling ripped off in a way, feeling victimized. And that comes from a lack of understanding. That comes from a lack of knowledge. That comes from laziness. That comes from impatience. All that kind of stuff. Now, some of you who are like that, you don't want to focus on yourself. For you, it's always external, that there's something else out there that is causing you to be pushed down. And I'm not saying, the universe is fair. It's not. But I mean, we got to deal with reality. I used to be the same way, man. Very cynical, very pessimistic all the time. And like I said, I spent so many years as a floor trader going short. I mean, it was like instinctive. It was like a trigger mechanism. Every time the market, I traded S&Ps in Chicago in the pit. The only guy that I can remember who consistently made money, and I did a video interview with him some years ago, was this guy named Louis Borsellino, who was the biggest trader in the S&P pit in Chicago. And very, very successful guy. And every time I used to watch him, he was on the buy side. He was on the buy side. Even in the crash of 1987, one of his, biggest scores he ever had, and he talked about it in my interview with him, and he's spoken about that many times in other interviews. He bought that day when the market opened way, way down. And, it was the biggest trade of his life at that time because it was an instant bounce off of the lows. You can't short. I mean, it's just an exercise. It's wasted energy. It's an exercise in futility. This guy, Burry, he should change his name to Burry, like he buried himself. He buried his account. He probably buried the accounts he was managing for people. I know how this works. Okay? I went through the whole thing, making big money on short selling and then pissing it all away over time. You don't short a growth function. All right? What you do is you accumulate good assets over time and let other people sell the market down. And when they do that, they're putting good stocks on sale. And that's when you want to go in and you want to buy them. Anyway, let me just repeat. I am optimistic that we've turned the corner here on leading flows. That's good. The issue of tariffs, it's still unresolved a little bit. But leading flows coming back, and if we can get back into a trend year over year of positive growth in leading flows, that's bullish for the market, especially now that investor sentiment is very negative. All right, I've been talking about that. So keep that in mind. Anyway, that's it for today. Thank you for watching my video. Please like and subscribe. And go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.